Hi, welcome back, everybody. SF Live, episode 153 this afternoon. It is 4 p.m. here in Vancouver, and I forgot to ask what time it is in Melbourne, but I'm guessing it's around 8 or 9 o'clock in the morning, so I'm going to ask Emanuel in a couple seconds, because we will be joined by an Australian guest this time. He's solely ASX focused, which is a bit of a novelty to us, but he's also giving his first interview to a North American/European outlet, which I'm extremely happy about. Emanuel Ajay Datt is joining us in a few short seconds. He's the principal and founder of Datt Capital, big investor in Adriatic Metals, so some of you might be familiar with him. Really active on Twitter. His feed has been, or his posts have been popping up quite often in my feed lately, so I'm quite excited to have him on. But before we switch over, please be sure to follow us on YouTube and Twitter. Make sure you turn that little bell notification on as well, as we do all our interviews live on this channel. That way you do have an advantage over the replay crowd, we call them, and make sure to use that to your advantage when investing. Now, without further ado, let me switch over to Emanuel, and wonderful good morning to Australia.
Thanks for having us, Kai.
No, it's great to have you on. What time is it now? I forgot to ask earlier.
Yeah, it's 10 a.m. in the morning,
okay.
So starting the day nice and fresh.
Oh, fantastic. Yeah, I've been in the office for 10 hours, so I'm going to be wrapping up with a fantastic conversation with you. So, Emanuel, like as I mentioned in the intro, this is like the first interview you're sort of giving to a North American/European outlet. Why don't we start with a bit of an introduction? Who are you and who's Datt Capital?
Yeah, sure, Kai. So I'm the founder of Datt Capital, who run a long-only fund. We run a fairly concentrated portfolio, and we invest across asset classes. We're industry agnostic, so we are well known for investing in growth opportunities, both in resource and non-resource companies. The fund has been open about 2.5 years, and so far we've achieved a 19% return per annum for investors. As you mentioned, we invest solely in Australian listed assets. A lot of people wonder why we do that. And the simple reason is that Australian stocks have achieved the best returns globally on average since 1900, according to Credit Suisse. So we don't really see too much reason why we should leave our local jurisdiction, which we know very well. At present, in terms of the portfolio, we hold about 40% in resource stocks, so developers and explorers. And a lot of that is really driven by the future we think is there for commodities, but also, with the recognition that mining itself is one of the oldest industries in existence, and it's essential for civilized life, even though this idea is often neglected.
Yeah, no, that is very true, and 40% is quite outsized. And like before we dive into the commodity side, I'm actually quite curious what other industries you're invested in before we dive more on the commodities.
Yeah, sure. So we invest in many other industries, technology, biotech, retail industries, which we have some holdings in. I think a lot of people are curious about how I first made my sort of start in the resource industry, given that it's not too common for an investor to straddle resources and non-resource companies. So I first started investing in resources back in 2006, which was just before the uranium boom of 2006, 2007. And resource investors will probably remember the flooding of Cigar Lake as being the catalyst for a huge leg up in the uranium spot price. So I picked a company called Alliance Resources that discovered a good extensional uranium resource in South Australia. And I had invested in the stock at about 20 cents, and it quickly rose to over $2. And I was hooked on resources from that point on. So that in a nutshell is how I sort of made my start in resources. And I've been investing in resources for many years or since that time. So I feel I've got a good handle on things now.
I can see how that is addictive. I can see that. So that's why, like, one of the reasons, it's one of those, like, where the risk reward makes a lot of sense in that regard, right? But you are trying to minimize the risk, obviously. So I'm quite curious, like, about your approach, and that's we're actually, you know what? Let's talk about commodity super cycles and cycles first before we talk about your direct approach on how you pick those companies. All right, let's frame it a little bit first. Like, I was going to ask, like, what stage are we in right now? Like, where are the markets at? What do you see? I know based on some of your picks or in your portfolio positions, you're not just gold, silver, precious metals. So I'm trying to get a good picture from you, like where's the market at?
Yeah, sure. Well, I think first we need to remember that commodity markets as a whole are not a single monolithic entity. There are niches within the commodity markets themselves. I think the broader commodity markets have been driven purely by this zero and negative rate interest rate policies that are being pushed by governments globally along with all the subsidies available. And we think this environment is just incredibly bullish for all commodities across the board. Over the last 2 years or so, we've seen sort of a flight to safety in the precious metal space. We've seen gold and silver appreciate significantly versus 2 years ago. But also, we've started to see soft commodities rise. Stuff like food and lumber and these sort of natural materials. We've seen big price appreciation, and that's directly a knock-on effect. For example, in Australia, we have a lot of incentives for home construction, and that's obviously feeding into the material shortages that are driving up prices. So going forward, we'd expect that to translate through to base metal prices, so zinc, lead, copper, and the bulk commodities, which I call them bulk commodities, iron ore, coal, manganese. These metals I think will rise going forward in the future, given the demand for changes to the energy mix. I think we've seen a big push of late from governments worldwide about making the transition to renewable energy sources, and I think this is going to be incredibly bullish for all these base and bulk commodities across the board. As an example, that I like to always put forth is that you think about wind turbines, which are a very popular renewable source of energy. When you break down the components of a wind turbine, 90% of the mass is in steel, iron, copper, and aluminium, with just the residual 10% being composites or plastics or fiberglass. And you think about also electric vehicles, where a lot of localities are starting to push increasingly more, and all these vehicles or mass adoption of these vehicles will result in a really huge uplift in terms of nickel, copper, lithium, tin, rare earths. These sort of metals and commodities will be in high demand going forward.
And we're going to talk about some of your top picks and some of your portfolio positions in a minute, and stay tuned for that, because he is going to mention some of his top exploration picks as well. But it's like, we live here in an echo chamber in North America, right? So being in Canada, we only look south, it seems like, and you're in Australia. You mentioned the Australian housing market and incentives for housing. Like, so my question is more like, what kind of indicators are you looking for in Australia? Being solely focused on the ASX, I understand the US is one of the main markets worldwide, but what are some of the other indicators that we might not be looking at in North America, or that we're forgetting about while you're maybe closer to Asia, for example?
I think that markets are generally localized in the regional sense. So North American investors, as you say, you're based in Canada, so you generally look south to the US, probably looks to Mexico as a whole. The whole North American region. We in Australia, we're obviously quite dependent on mainland China in terms of demand for our resource base or endowment here in Australia. So I feel that here in Australia, we pay a lot of attention to what's happening in Southeast Asia and East Asia, and South Asia is obviously a region that's up and coming quite rapid. So I think that as an Australian, we see that influence every day from these sort of Asian economies.
Now, run us a bit through your investment selection process. So you said you're obviously sector agnostic, but what are some of the indicators you're looking for, or what kind of markers do the companies need to sort of tick to even consider it?
Yeah, sure, no worries. So in the resource space in particular, I think first and foremost, you have to treat a resource investment just like any other investment in terms of does the company have the potential to achieve an economic return over time. And so you've really got to think in a very business-like scenario. Uh, so um, this can be basically related to the location of the project, the jurisdiction, along with size factors. So, being able to find a big enough size of resource is a very important consideration for us in terms of determining whether the company itself has economic potential in terms of generating an economic return. But also, having a good resource doesn't mean it's going to be delivered. So, having a competent management team who have some form of edge is also very important to us. So these three factors, I would say, the top, the big three, that we
Yeah.
look at.
And in terms of commodity, I know you mentioned a few that are in an upcycle, obviously based on macroeconomic factors, but what are you like hone is like, I was going to ask you about the percentage in your portfolio, let's say precious metals, base metals, bulk commodities, like even agricultural commodities. What's the distribution there?
Yeah, sure. So I think that at this point in time, we don't have a great deal of exposure to bulk commodities in terms of coal, iron ore, and manganese. Probably most of our exposure is still skewed towards, but also base metals itself. I think we are sort of looking for good bulk commodity exposures, but it's always a very difficult. You need to dig through a lot of opportunities to find one that really stands out.
Yeah, one that stands out, and I mentioned Adriatic Metals at the beginning. Like, run us a bit through that investment process. I'm curious, like, because you've been an investor for a long time in the company. Like,
Yeah.
the idea origination, the follow through, like whether they tick the boxes along the way. I'm just curious about that investment process and why you decided to stay on board, or why you even decided to consider it to invest in it.
Yeah, sure. So we first noticed Adriatic. It would have been, I think, about mid 2018 when Adriatic sort of disclosed, some incredible discovery holes, and we looked at it, and we were just shocked, to be honest, about how broad the intersects were and the grade. Um, we were very much aware that Bosnia, the jurisdiction where Rupice, where Adriatic's flagship project is, was a fairly new jurisdiction. So it took us probably about 6 to 9 months from first noticing the company in terms of doing all the due diligence, whether we thought the jurisdiction was investable, and to really do our sort of deep homework. And for those who aren't sort of familiar with Adriatic, we think that it's one of the highest quality undeveloped resources globally. For It's a polymetallic deposit, but really the project could probably stand up on any two metals that it produces, but it produces actually about five or six different metals contained within the deposit. So how we see Adriatic at this point is, we're expecting a DFS to come out mid-year. The PFS came out, it showed about 1.3 billion post-tax in NPV8. And so currently it's trading at only about 32% of that figure, which is incredible considering that the project will throw off over 300 million in free cash flow during the first 5 years for only a $200 million capex spend. These are Australian dollars, by the way, I'm quoting in. And the other big asset in Serbia, which is a base metal resource, has just been totally ignored. So we think that I think the company are flagging first production from Bosnia. I think by the end of 2022, if memory serves me correctly. But there's true potential for this company to grow into a substantial mid-tier miner in the next couple of years. In terms of edge, we sort of think that the company has, obviously got a first mover advantage in a newer mining jurisdiction, but also we're also very much aware that the project is of national importance to Bosnia. So we think there'll be very little holdups throughout the permitting process itself.
Yeah. No, and by full disclosure, some employees of Soar Financial also own stock in the company, so just making everybody aware of that as well. I'm curious, like in terms of your investment approach, like how did you enter the company, like, and how are you following through? Was it for you an initial one-time investment that now has grown to a certain size that you're happy to sort of nurture and make sure that it's going well, or are you like in terms of financing, are you staying pro rata in terms of your commitment?
Yeah, yeah. Well, the problem I always have, or the question I always ask myself, Kai, is that if I sell out of a project that's trading at only 32% of its PFS NPV value, I think I'm shortchanging myself, but also have the problem of reinvest or finding a home for that money. So, for in my own sort of line of thinking, I think that Adriatic will only get better in terms of its project pipeline and potentially the economics of the project, as it moves through the DFS process. And I don't want to cut off my upside effectively by selling too soon. I think the company itself is just a standout in terms of being M&A prey. You've got such a high quality resource in such a great jurisdiction. It's only a matter of time, I think, before suitors come knocking on the door. But yeah, I wouldn't mind seeing this through to development, given how strong the project is economically.
No, that makes a lot of sense, and we're quite familiar. We had Paul Cronin on the program a couple of times, so our followers should be somewhat familiar with Adriatic. I had a follow up question to that one, and it just escaped me. That's what happens when you do interviews after 10 hours in the office. no, no, it escaped me. I had a follow up question to Adriatic. See, that's what happens when you're live and you don't script questions out. So
That's so good.
no, that's perfect. Maybe it'll come to me at the end of our conversation. But
Sure.
so that was insightful. But like, did you participate originally in a private placement, or did you buy in the market?
I initially participated in a placement. I think that was sometime in 2019, and then I purchased the rest of the stake on market. So a split approach we took.
Gotcha. And as we said, like you were only investing in ASX listed companies, so I'm assuming your research universe and focus universe is ASX listed explorers. And we got a question
Yep.
on Twitter, like in terms of like favorite early stage exploration plays. Maybe you can talk your book a little bit. Like obviously they have to be your favorite since you own them. Oh,
Yep.
the question came back to me. Let's jump back to that one real quick. And the question is investment time horizon. Like
Yeah.
how long do you plan to stay invested in a certain company? It doesn't have to be Adriatic, and that's more general. Because I know you're an
Yeah.
absolute return company. So what is the time horizon on your investments?
Yeah. Well, I think that that's always a difficult question. I think as long as the company is meeting its business outcomes and, and in Explorers in particular, or the project is prospective enough and they keep swinging basically. That's, exploration is really a game of numbers and having enough follow-up prospects in the pipeline to follow up and test is a really big part of exploration.
And you don't have a cutoff date for your fund where you have to say, okay, we have 10 years of, let's say you get $1 million and you have to stay invested for 10 years. You can't draw down the funds again. Like that's sort of the question as well.
Yeah,
Like in terms,
yeah.
so
No, there's no lockups around our fund, so there's I'm still a fairly young guy. I like to think so. Theoretically, it could be decades.
okay, no, that's what we want to hear. Awesome, because
Yeah,
we like supporting the industry for a long term and in and out, empties pockets as well, right?
yeah, of course.
Let's get back to the question I tried to ask, but then had my brain lapse there. But let's talk about early stage investment opportunities, and maybe you can talk your book there. Like, what are some of your favorite early stage opportunities there?
Yeah, sure. So I'll probably highlight three of my favorites. We have a position in all these three companies, and I'll probably just run through each company very quickly, sort of a minute a company, if that's okay.
Perfect. Yeah.
So the first one I will run through is a company called Yandal Resources, who are a gold explorer focused on Western Australia, which is commonly regarded as the world's best mining jurisdiction globally. So Yandal have an existing shallow oxide resource of about 300,000 ounces, just situated right near the Bronzewing gold mill. They have very reasonably sized and central land holdings that have been vastly underexplored historically. They have a very significant prospect called the Gordon's Dam prospect, where they've intersected anomalous gold in fresh rock over about 1.5 kilometers of strike that's still open in all directions. So, and this prospect is only a short distance from Kwinana Belle Mine, currently owned by Northern Star Resources, who are a $12 billion company. They also have a number of other very promising prospects in Sims Find and Flinders Park, where they've recently intersected very shallow and high grade strikes. We think this area is quite similar to Jundee, which is Northern Star's, again, flagship mine. And the company are currently drilling part of the way through a 100,000 meter drilling program that they're hoping to knock over this calendar year. On the register also, Yandal specialist, DGO, who are most famous for having picked degraded mining when they were at 5 cents prior to finding Hemi, and that company traded from 5 cents to $1.50 at its high. So very well regarded Australian investors. And the edge for this, the edge we see for this company is that Yandal have a team that is solely focused on the Yandal belt. They've got a great ground holding and shallow, high grade prospects that can be tested relatively cheaply. I'll now move on to my second pick, which is Strategic Energy Resources. So this is quite a micro cap, I'll typify it as, and they are focused on hunting large scale IOCGs, iron ore, copper, gold deposits in frontier regions undercover. So their two flagship projects, in the East Tennant region, where the Australian Geoscience had a national drilling program to test the stratigraphy of which is basically the layers in the ground. And some of their drill holes intersected copper mineralization, incidentally. So it's just lit up the whole region in terms of proving copper potential. And the second flagship is the Kenobi district, which we think is an extension of the Mount Isa base metal province, which is one of the best endowed globally. They hold 1,700 square kilometers and hold the entire sort of northern succession of the belt. Historically, holes in the region, 75% have come up with some form of mineralization, which is absolutely incredible as an explorer. And they hold a whole suite of other assets and grounds around Australia in frontier regions largely. The neighbours include all the large players, Newcrest, Rio Tinto, Fortescue and Oz, and it's available for a market cap of 10 million at present. The edge for this company, we feel, is they take a very scientific approach and with a big onus on geophysical evaluation. And they actually have Rio's ex-chief geophysicist on the team, and they have a partnership with Caldera Analytics, who are an artificial intelligence platform and use machine learning basically generate prospects on the ground itself. So a company that's, even though it's a microcap, it's doing some really interesting stuff, and we think that has it's a high risk, very high return proposition at this stage. And last but not least, we'd also like to highlight called Alice Queen. Alice Queen are a gold developer at Horn Island and Fiji, but also have a greenfield exploration kicker with their ground in the Lachlan Fold belt. They have a 500,000 ounce resource at Horn Island, and they have a joint venture with Santa Barbara. They're currently performing scoping studies over this gold deposit at the moment, and we hope to see some results in the next 3 months. The Lachlan Fold Belt holdings are probably what everyone has been most excited about, given that this is a region that hosts Newcrest Cadia mine and Alkane's recent Boda discovery as well. So they're currently exploring to the north of Boda in the Yanduri and Mandurah. These are sort of Newcrest actually were in a joint venture with this company, but pulled out due to access issues. The company have now resolved the access issues and are testing these same targets that were generated by Newcrest. So the current market cap of this company is 30 million, and we see the edge here as being that the company have some regulatory geniuses working for them. So they've managed to remove moratoriums over Horn Island, which previously mining was prohibited at Horn Island, but now they've had that removed, as well as achieving access in the northern Lachlan Fold Belt, which is covered by a state forest. And but also they also have a very renowned and excellent technical team led by John Holliday, who discovered the Cadia resource for Newcrest, and he's supported by a team of very tech individuals, all from sort of big company backgrounds as well. So those are our top three, and there's a lot of information, I guess, to digest that I hit you with.
There is.
But
no, it's really good. I think all these three names, the way you pitch them, like sound really enticing. And I have to admit, with this, like I wasn't familiar with any of them. I have to admit, like Strategic Energy Resources, I thought you were going to pitch me a lithium company,
yeah,
right? So I was quite excited to hear that it's actually an IOCG, like really interesting land holdings there in Australia. So one I'm definitely checking out after this conversation as well. Just last question maybe as well, like how much cash do you have left? Are you on the hunt for something new right now, or what's your appetite?
Yeah, sure. So we generally have a heavier than usual cash weighting in our own portfolio, and we recognize the optionality of cash. We never want to be short of cash if we find a good opportunity or a good deal we come across. So I'd probably say that we're about 10% odd in cash at the moment. So very few investors recognize the optionality of cash, and I think it's something that has definitely held us in good stead rather than being overinvested.
Yeah, no, it reminds me, my grandpa always used to have cash in his pocket because he could never pass up on a good opportunity or a good deal, right? So,
yeah, definitely.
Exactly. Emanuel, this was fantastic. Really, really appreciate the conversation. Can't wait to catch up again soon. Maybe once Adriatic puts out a DFS, we can talk about that one in more detail, because I know you're following the story very, very closely. It's always good to get an independent view instead of having Paul on the program the whole time. We should have a critical investor talk about it more. So really appreciate you joining us. You have a wonderful day in Australia. I'm shutting off now. I'm done for the day. I'm going to make sure this is properly uploaded to YouTube, and then I'm calling it quits. But it was a very enlightening and great conversation. I'm definitely going to check out the names you've mentioned. They all sounded interesting for a follow-up, in my opinion. So appreciate that. And thanks for coming on the program. Thanks for making us your first stop in North America.
No worries. Thanks so much, Kai, for hosting us, and always a pleasure to chat to you.
It's great. And everybody else, thanks for watching. Thanks for tuning in. Thanks for your questions. It makes this format so much more lively. It's not just a scripted Q&A session with our guests. We can ask the questions that burn under your fingernails. Make sure to follow us, of course, on YouTube. Follow us on Twitter. Hit that like and subscribe button. Turn on the bell notifications, because we do all our interviews live. That way you do have an edge. And maybe you just heard about the new investment ideas from our guest, Emanuel. So go check them out and be ahead of the curve there. So thanks for that. And we'll be back tomorrow with another expert interview. Thanks so much.